Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial conditions.
Oliver Slope is with Blue Line Futures. All right, Oliver, what's it going to take here to turn the ship around? Seems like everything is under pressure today.
Everything is a little bit weaker to start the week. And last week at this time, we started kind of firming up as commodities got a nice tailwind with the U.S. dollar making new lows. But really, since the Federal Reserve meeting and the announcement of the new Fed chair around the corner to replace Powell, the currencies have done a 180 and a reversal. So you're seeing a rebound in the U.S. dollar, and that in turn is pressuring a lot of commodities. You can see it especially in some of those precious metal markets, the crude oil market sharply lower. So when you get commodity flows like that happening, it's tough for these grains to get going. All in all, you zoom out, I think the volatility in those outside commodity markets will probably start to subside, and we can settle into somewhat of a normal trading range. And that should be beneficial to the grain markets, especially as we slowly but surely inch a little bit closer to spring, and we can maybe put some premium back in these prices. And once we start talking about what we're going to get in the ground and what the potential is for that. From the technical perspective, right at an inflection point here for the March corn contract, 422 to 425. That's really where we had that conviction move higher on January 23rd. So this is a spot where we need to hold a break and close below there, and we potentially retest those post-WASD lows at 417 and a quarter.
Okay, and that's corn. And when we talk soybeans, see if I can bring up the 1 month here on soybeans as well. We're dealing with a market that's been aided by a run-up in bean oil. But we pulled back now 3 straight sessions here. What's happening in this complex?
Well, not a whole lot, to be frank. And as you had mentioned, I mean, if you zoom out and look at where we were a year ago, we really haven't gone anywhere fast. Fund positioning, for the most part, has been flat outside of a blip higher on that Chinese news. But now we've got that out of the system, and we're just trading sideways. We were literally right on the 20-day moving average near 1060 in that March contract, which in the short term is a little bit of an inflection point. We get out above there, maybe you see 1070, and then on the downside, 1040 to 1050. Ultimately, I think we probably settle into that range unless we get new news either on the trade front with China, weather concerns out of South America, or potentially some jawboning on what we're going to put in the ground in the spring here in the U.S.
Well, and I'll throw one more in just because there's a field of canola there, and the only other row crop in positive territory year to date is losing that. Canola lower across the board. All right, Oliver, we'll hang on tight because we've got a wild ride developing over here in the cattle market. Hang on. We're coming back with more on June and July. Oliver Slopes with Blue Line Futures. I mentioned, hold on, we're seeing a little wilder ride here. What's driving the livestock markets?
Yeah, well, at least we're seeing something positive on the screen to start the week. That obviously being the livestock markets, cattle and hogs trading very firm to the upside on the back of that biannual inventory report from the USDA, which kind of just reminded people that there's a good, solid fundamental backdrop for this market. The cash trade started to firm up a little bit late last week as well, which certainly helped. And now we're kind of back towards the top end of the range, near 240 for that April contract, which the chart looks constructive, don't get me wrong, but we're back to that point where we really started accelerating lower in October. So if you're a producer or have the physical risk, I think this is a pretty good opportunity to look at protecting the downside. Options are a great tool to do that. Protect the downside, keep the upside open. A little bit concerned. We saw Governor Abbott out of Texas release a statement with regards to screwworm last week, and Secretary Rollins last night on Twitter released a statement, not saying anything really imminent, but almost hinting to the stance that it's basically at our doorstep. So I do think there is some headline risk out there, and those with physical risk should probably use this as an opportunity to look at some sort of protection. Okay,
Oliver, before we go, last week it was all about, well, it wasn't all about it, but the last few weeks it's been all about the precious metals. Here is a chart for silver. This is crazy. The run-up that we saw, and that's pretty amazing, but what you see here in the past month, the past week, has been just as crazy. Any final thoughts here?
That it is one for the record books. I remember trading metals and watching metals very closely in 2011, and you thought that was wild. This makes that looks like child play. Just the deleveraging that we've seen in the metal markets over the last 3 sessions has been remarkable. But that's what happens when you get a parabolic market. That's where that old saying, escalator up, elevator down, comes from.
Well, that's more like a fire pole straight down, man. Tell you what, we used to think that nat gas was the widowmaker. Maybe this is kind of joining in. Oliver, great to see. Oliver Slope is with Blue Line Futures.
Trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including this specific material used and distributed by Blue Line Futures LLC, shall be construed as or is in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.